Well, hello and welcome once again to Beat the Reset. My name is Tim and I am the guy in the hat. And today we have with us Carmelle Pavan from As Good as Gold in Melbourne. Now, before we get started today, I just wondered if you could tell us a little bit about yourself again and who you are and what it is you do.
Certainly. I'm the General Manager of As Good as Gold Australia. I've been with the company for over 7 years, seen a huge growth in precious metals, which is fantastic, including self-managed super funds. My background, just in a nutshell, I was originally a radio, television, broadcast journalist, ran my own business, marketing, PR. I've worked in finance, a couple of years in finance as well, but always looked after clients, and we're starting to do a lot more of these promotions such as podcasts and a lot more marketing, getting the word out there, Tim, of the benefits of owning precious metals.
Absolutely. And today we wanted to explore one component of precious metals, and that was something to do with risk diversification. So you and I were having a conversation just before Christmas about, what are the risks of being in certain assets and where does gold and silver fall into that risk? Are they high risk? Are they mid risk? Are they low risk? This is something that consumers don't think about, but investors have to think about. So what I want you to do is share your kind of view of risk diversification and your view of investing per se, involving obviously gold and silver as well.
Well, investing is a really interesting term in precious metals because, Tim, you're investing into your financial future. And what I mean by that is you actually are buying a physical product. So can you invest in a physical product? Yep, sure. I guess you could kind of stretch that term. But the most important thing to remember with precious metals, that's something that we are very good at. We love to help people to diversify by buying precious metals, gold and silver, bars, rounds and coins. Now, every investment has a risk or some element of risk. What's a risk that if you purchase precious metals, what is a risk? The risk is that if you are taking it with you, then, and because of course you can hold it, like our wonderful dear friend, our global renowned mentor, Lynette Zhang, if it ain't in your hand, you don't own it, right? I think she's kind of paraphrasing there, or is that exactly what she says?
If you don't hold it, you don't own it.
You don't own it, exactly. So the biggest risk if you own it is that theft. So someone will know about your products, someone will steal it from you, or if it's not secured, I mean, you wouldn't have a safe at home that is visible, because if you do risk thieving, then the first thing they target is going to be your safe, because there's something precious and valuable in there. So to minimise the risk of your precious metals, should you own them, then you need to make sure that they're safe, secure, where it can't be seen, it cannot be located. And then if we're taking it to the next level, may not be in the house or the building or the premise where you have your precious metals, it could be on the land. So that might be under a barn, under a tree, you dig it in the earth. And believe me, Tim, I've had clients who actually do that for good reason. Then you have to mitigate the risk that it will be exposed to elements of nature. Now, what are they? Floods, fire, tornado, hurricane, maybe in this country. Do we have tornadoes in this country, Tim?
I think we do.
Yeah.
Wasn't that what happened to Darwin?
Yes, yes, okay.
No, there was a cyclone.
Cyclone.
No. Anyway, continue.
Yeah, massive, vast, dangerous winds, let's put it that way. Or earthquakes. That's another one, earthquake. If you're digging it in a huge, underground and then there's a bit of an earthquake, you've just got to be very, very careful. But you choose where you're going to have as less risk as possible when you're holding your own personal stash, personal products. The other side of risk is the value, the intrinsic value of gold and silver. So no one can predict the future, but what we can look at is, number one, the past. So what are the solid facts with gold? Well, I can tell you, and we certainly have this information on our website. You can go to any other website that tracks the spot price over time of gold and silver. So gold has performed extremely well in terms of all asset classes, extremely well. And the proof there is in the last 22 years, gold has actually increased in value approximately 25 to 27%. Pure profit, that is the yield that gold has made over that amount of time. So that sounds pretty good to me as an investment. Gold is increasing this year exponentially. And when you look at what's happening geopolitically, Tim, you talk about this a lot, what's happening with the BRICS, the member companies of BRICS, the state of our nation, the high inflation, the increased interest rates, the hardship that people are facing. Why wouldn't you look at a solid investment that is purchasing precious metals, even if it's a small amount? You know, you can even spend a couple of $100s for first-time investors. A little bit of silver. Right now, silver is trading at today $35 Australian an ounce. Gold has actually started to rally, so it's $3,067 just before I sat down, Tim, in Australian dollars. So we on our website, you'll see the price of gold and silver on our website. And essentially, what I'm saying is we can look at any types of investment or purchasing. It is an investment for your financial future. What are the risks in purchasing actual physical? Well, aside from owning the physical, there's very, very few risks other than finding a bullion dealer that will actually buy back when you liquidate, i.e. when you sell your products. So for us in this industry, Tim, I think you'd vouch for that. Gold is expected to increase exponentially, the value of gold this year. Silver has been amazingly inexpensive, but it's very manipulated. It should be what, Tim, you would agree? It should be about $1,000 Australian per ounce at the moment?
Well, I mean, according to the US debt clock, it should be somewhere up around about 13,500 if you have a look at the ETF market and the shorting of the market. I mean, I know that sounds crazy, but the real price of silver is probably in the order of about $13,500. If you were to compare it to the amount that's mined out of the ground every year, which is 25,000 tonnes,
yep,
to the deficit and, of course, the huge hole that we have in our debt system, that would be about right. So it's an incredibly undervalued commodity is what I want to agree with you on that one.
And when you compare gold and silver, we're talking a $3,000 differential between a spot price of gold and the spot price of silver.
Well, that's right. I mean, and that's the rarity. And 400 tonnes of gold is mined every year, and against 25,000 tonnes of silver. So that's that rarity component. And there was something else you mentioned. I just wanted to add to that. You're talking about the value of gold and how incredible gold is. And I just want to remind people that are listening that in the 1930s, when the banks were closed, gold was the only asset class that was in the black. Every other asset class failed. Every one. It was the only one that was still in the black. And, of course, we know that as a result of that, it was the perfect asset to restabilise the central banks, which is why they took it off the people. But, yeah, you're 100% right. I just wanted to sort of underpin what you were saying.
Well, isn't that the saying that's been the old adage that gold is for the elite, silver is the money for the people? That hasn't changed, except you can still, right now, purchase gold. But, you know, Tim, there's going to be a time when it will be actually unaffordable.
Yeah, and if you think about it, I mean, gold is an incredible reserve asset. There's no question. What you say is 100% spot on. It's even in a normal market, it just ticks over, roughly 10% compounding year on year. It's just your stable asset. Silver, there's an old saying that gold runs first, silver runs furthest, and silver tends to outrun gold. And the reason that I think that's important is because you can buy a lot more of it. I mean, you can literally buy 83 or 84 times as much for the same amount of gold. So exactly. You can have an asset that's increasing exponentially. So silver for me, I mean, is an incredible tradable asset. Gold is a great reserve asset, exactly what you said. And
again, reinforcing that literally half an hour ago, the spot price difference between gold and silver was about $3,000. So
yeah. It's interesting. And silver, as I said, if we have a look at the ETF market and the shorting of the market, as soon as if that market wasn't in the way, if the COMEX was to step out of the way, you would see the real value of the commodities, not the contract price. And, you mentioned Lynette Zhang. She talks about this. It's not the real price. The real price is what it can buy you. So as soon as they move that COMEX out of the way, we're going to see a massive increase in the commodities. But if you don't hold them, you won't have that wealth shift.
Absolutely. We started talking about diversification, and I just wanted to go back, if I may, Tim, on another level of diversification. Say, for example, a self-managed super fund. You might have a couple of $100,000 in a superannuation fund. Then we can help you establish your self-managed super fund. We have reliable, trustworthy, yes, there are such thing, tax accountants who do specialise in self-managed super funds. Some of them actually do purchase precious metals, and all of them absolutely support the asset class, which is precious metals. So we're not saying put all your eggs in one basket. That's not what we're saying at all. You may choose to say, no, I just want all gold. Hey, Carmelle, I've got 600,000, my wife and I, and this is a real client example, they just wanted to purchase they just wanted to purchase gold. So usually it depends on when you're going to retire or how far from retirement you are, what your preference is. Our recommendation is more maybe 70 to 80% precious metals, and then definitely think about, so diversify your portfolio. Think about cryptocurrencies. The ISO 20022. You might also buy shares, blue chip shares. You might still have cash. Or if you like, we have something very special that I don't believe any other bullion dealer offers, Tim, and that is that our Managing Director, Brian Paynes, can actually talk to you once you become a client, you've purchased some precious metals in your self-managed super fund, and then he will talk to you about buying shares in Australian gold mining companies. So I'm just giving another example of diversification. So you're not putting eggs in one basket. You have gold and silver. So you've got your precious metals. You're probably buying some crypto as well. You can talk to you about that, for example, which to purchase, how much, how to do it. Then you might have some shares yourself. You might have some cash as well in your account. Leave a little bit of cash to pay day-to-day bills, maybe auditing fees if it's a self-managed super fund. And then you may choose to also look at Australian gold mining companies.
Yeah, I think that's a brilliant idea, Carmelle, and certainly a great opportunity for your clients to diversify their wealth into essentially securities and so on. And if we have a look at the 1930s, especially the 1929-1932 stock market crash, some of the only stocks to actually survive were the mining stocks.
Yes.
And I think we could see the same again. Personally, just my own opinion is that anything in fintech, energy or mining would be a great diversification, but mining especially. So it's great to see that As Good as Gold offer that service, Carmelle.
I agree with what you just said. I actually have in my previous life, Tim, I've actually worked with some fintech and wealth techs. Not Atlassian, but close to it. So, yeah, watch this space. The only other thing if I could just add, with a self-managed super fund, so there is no prescriptive formula of what you can purchase quantity-wise in your self-managed super fund. So the standard legitimate assets are, just like a superannuation fund, property, precious metals, cryptocurrency, believe it or not, cash, shares, stocks, bonds. You can't buy a house to live in. You can't go on a holiday. You can't buy a boat in your self-managed super fund, nor can you in a superannuation fund. So I just wanted to mention that the ATO hasn't made any legislation or regulation changes, but you might want to just think about diversifying somewhat when you are purchasing precious metals in your self-managed super fund. Now, you can choose to purchase majority, but we will always recommend have a good think about your strategy. Talk to your tax accountant or the one we refer to you, because a strategy needs to be the first thing that you need to plan, and the ATO needs to at least know you've thought about a strategy, you looked at a bit of diversification, you're balancing your risk, you're buying an asset that has very low risk, and then you might consider more mid to long-term strategies around investments and the diversification of that the risk as well.
Yes, and I just wanted to add another asset class, and that is fine collectibles and art as well. You can also go into a self-managed super fund, and that's something that I particularly have a great interest in. But that's it for me and Carmelle, of course, for today's podcast. I hope you've learnt something. Carmelle, you always bring a wealth of knowledge because you get to work at the coalface of this stuff all day, every day. So thank you again for coming in and having a chat to us. And is there any sort of parting words you just want to leave the audience with today before we go? Any wise words, anything you can say regarding gold and silver, and maybe just the general state of the economy, maybe to do, just anything you could share with us just before we leave the podcast?
Aside from it's always a pleasure to speak with you, love being in this industry, just really to let your audience know that we're here to generally help and serve you, empowering you towards your financial freedom. That's my purpose. So love to help. Thank you again, Tim. Absolute
pleasure, Carmelle, from As Good as Gold Melbourne. And I'll put some details below so they can get in contact with you, of course. And as always, whatever you're doing out there, look after your health, look after your wealth. And as always, make good choices.